Everybody likes a bargain, be it a sale on a piece of clothing, the latest electronic gadget, or your dinner tonight. Investors are no different. We also like to buy stocks at bargain prices. But bargains in the stock market are not as evident as other bargains. There's no price tag with a sales sticker that can tell you how much cheaper a given stock is trading for today. Finding bargain stocks requires effort on your part. And even if you roll up your sleeves and do some due diligence, there is no guarantee that your findings will prove to be accurate. I'd like to show you a way you can automate and expedite some of this due diligence process to quickly find potentially undervalued dividend stocks. We'll be looking at Dividend Aristocrats specifically, and with a little help from Dividend Yield Theory, we can quickly identify which aristocrats might be bargains today. I'll be using my custom Dividend Aristocrat spreadsheet to help me today. We'll dig into the data in just a moment, but I'll let my custom macro update the Dividend Yield Theory analysis for all of the aristocrats first. While the macro is running, let me spend a minute explaining Dividend Yield Theory, in case you're not familiar with it. Dividend Yield Theory has been around for over 60 years, and it was first popularized by Investment Quality Trends. The theory works on a simple principle, that dividend yields tend to revert back to the mean over time, especially for stable blue-chip dividend stocks. In other words, you can estimate whether a given stock is trading for a bargain price today by comparing its current dividend yield to the trailing average dividend yield. If the current dividend yield is higher than the trailing average, the stock is likely undervalued. And if the current yield is lower than the trailing average, the stock may be overvalued. A word of caution before we go further. While Dividend Yield Theory can tell you which dividend stocks might be undervalued today, it won't tell you whether a stock will be a good investment, much less whether it'll generate a respectable level of return in the future. Dividend Yield Theory is meant to be used as a tool to identify potentially undervalued dividend stocks for further review. So it is prudent that you still conduct your own due diligence on all of the suggestions Dividend Yield Theory presents. Alright, let's run down the list of all the Dividend Aristocrats to see which ones are potentially undervalued today based on Dividend Yield Theory. Up first we have AbbVie, ticker symbol ABBV, and it looks about 4.5% overvalued today, with a current dividend yield of 3.74%. Next is Abbott Labs, ticker symbol ABT, and it looks about 15% undervalued today, with a dividend yield of 1.85%. Next we have Archer Daniels Midland, ticker symbol ADM, and it looks about 34% undervalued today, with a dividend yield of 3.87%. Up next is ADP, ticker symbol ADP, and it looks about 6% undervalued today, with a dividend yield of 2.05%. Next is Aflac, ticker symbol AFL, and it looks about 2.69% overvalued today, with a dividend yield of 2.16%. Then we have Albemarle, ticker symbol ALB, and it looks about 40% undervalued today, with a dividend yield of 1.88%. Up next is Amcor, ticker symbol AMCR, and Amcor doesn't have enough price data history for this tool to tell us whether it's undervalued or overvalued. But we can see that it currently sports a dividend yield of 5.23%, which is higher than its trailing average of 4.63%. Up next is A.O. Smith Corporation, ticker symbol AOS, and it looks about 16% undervalued with a dividend yield of 1.96%. Up next is Air Products and Chemicals, ticker symbol APD, and it looks about fairly valued today with a dividend yield of 2.19%. Rounding out the A's is Atmos Energy, ticker symbol ATO, and it looks about 4.5% undervalued today with a dividend yield of 2.47%. Up next we have Becton Dickinson, ticker symbol BDX, and it looks about 17% undervalued today with a dividend yield of 1.68%. Next we have Brown-Forman Corporation, ticker symbol BF.B, and it looks about 56% undervalued today with a dividend yield of 2.79%. Next is Franklin Resources, ticker symbol BEN, and it looks about 29% undervalued with a dividend yield of 6.38%. Rounding out the B's is Brown & Brown, ticker symbol BRO, and it looks about 9% overvalued with a dividend yield of 0.58%. Next we have Cardinal Health, ticker symbol CAH, and it looks about 84% overvalued with a dividend yield of 1.58%. Next is Caterpillar, ticker symbol CAT, and it looks about 40% overvalued with a dividend yield of 1.43%. Then we have Chubb, ticker symbol CB, and it looks about 29% overvalued with a dividend yield of 1.32%. Up next is Church & White, ticker symbol CHD, and it looks about 5% overvalued with a dividend yield of 1.07%. Up next is CH Robinson Worldwide, ticker symbol CHRW, and it looks about 3% overvalued with a dividend yield of 2.3%. Next is Cincinnati Financial, ticker symbol CINF, and it looks about 4.5% overvalued with a dividend yield of 2.34%. Then we have Colgate-Palmolive, ticker symbol CL, and it looks about 1% overvalued with a dividend yield of 2.23%. Up next is Clorox, ticker symbol CLX, and it looks about 9% undervalued with a dividend yield of 3.09%. Next is Cintas, ticker symbol CTAS, and it looks about 8% overvalued with a dividend yield of 0.79%. Rounding out the C's, we have Chevron, ticker symbol CVX, and it looks about 2% overvalued with a dividend yield of 4.19%. Up next is Dover Corporation, ticker symbol DOV, and it looks about 36% overvalued with a dividend yield of 1.04%. Up next is Ecolab, ticker symbol ECL, and it looks about 3% undervalued with a dividend yield of 1.05%. Next is Consolidated Edison, ticker symbol ED, and it looks about 1% undervalued with a dividend yield of 3.67%. Then we have Emerson Electric, ticker symbol EMR, and it looks about 42% overvalued with a dividend yield of 1.64%. Next is Essex Property Trust, ticker symbol ESS, and it looks about 7% undervalued with a dividend yield of 3.54%. Rounding out the E's is Expeditors International of Washington, ticker symbol EXPD, and it looks about 12% undervalued with a dividend yield of 1.28%. Then we have Fastenal, ticker symbol FAST, and it looks about 10.5% undervalued with a dividend yield of 2.32%. Next is Federal Realty Trust, ticker symbol FRT, and it looks about 2.5% overvalued with a dividend yield of 4.11%. General Dynamics, ticker symbol GD, looks about 2% undervalued with a dividend yield of 2.26%. Genuine Parts Company, ticker symbol GPC, looks about 22% undervalued with a dividend yield of 3.44%. Grainger, ticker symbol GWW, looks about 64% overvalued with a dividend yield of 0.74%. Hormel, ticker symbol HRL, looks about 37% undervalued with a dividend yield of 3.84%. International Business Machines, ticker symbol IBM, looks about 56% overvalued with a dividend yield of 2.92%. Next is Illinois Toolworks, ticker symbol ITW, and it looks about 8% undervalued with a dividend yield of 2.34%. Then we have Johnson & Johnson, ticker symbol J&J, and it looks about 19% undervalued with a dividend yield of 3.28%. Up next is Kimberly-Clark Corporation, ticker symbol KMB, and it looks about 10% undervalued with a dividend yield of 3.76%. Then we have Coca-Cola, ticker symbol KO, and it looks about 3.8% undervalued with a dividend yield of 3.09%. Up next is Kenvue, ticker symbol KVUE, and again, due to lack of price history, we don't have an undervaluation here. Kenvue's current dividend yield is 3.85%, which is in line with its 5-year trailing average. Up next is Linde plc, ticker symbol LIN, and it looks about 6% overvalued with a dividend yield of 1.27%. Then we have Lowe's Companies, ticker symbol LOW, and it looks about 12.5% undervalued with a dividend yield of 1.76%. Next is McDonald's, ticker symbol MCD, and it looks about 11% undervalued with a dividend yield of 2.44%. Then we have Medtronic, ticker symbol MDT, and it looks about 14% undervalued with a dividend yield of 3.06%. Up next, we have McCormick, ticker symbol MKC, and it looks about 27% undervalued with a dividend yield of 2.34%. Then we have Nordson, ticker symbol NDSN, and it looks about 38% undervalued with a dividend yield of 1.43%. Next is NextEra Energy, ticker symbol NEE, and it looks about 26% undervalued with a dividend yield of 2.91%. Rounding out the ends, we have Nucor, ticker symbol NUE, and it looks about 7.5% overvalued with a dividend yield of 1.73%. Up next is Realty Income, ticker symbol O, and it looks about 20% undervalued with a dividend yield of 5.86%. Then we have Pepsi, ticker symbol PEP, and it looks about 25% undervalued with a dividend yield of 3.6%. Next is Procter & Gamble, ticker symbol PG, and it looks about 4% undervalued with a dividend yield of 2.42%. Then we have Pentair, ticker symbol PNR, and it looks about 40% overvalued with a dividend yield of 0.98%. Next is PPG Industries, ticker symbol PPG, and it looks about 22% undervalued with a dividend yield of 2.22%. Then we have Roper Technologies, ticker symbol ROP, and it looks about 17% undervalued with a dividend yield of 0.61%. Up next is JM Smucker, ticker symbol SJM, and it looks about 25.5% undervalued with a dividend yield of 4.08%. Then we have Sherwin-Williams, ticker symbol SHW, and it looks about fairly valued with a dividend yield of 0.79%. Next is S&P Global, ticker symbol SPGI, and it looks about 11.5% overvalued with a dividend yield of 0.7%. Then we have Stanley Black & Decker, ticker symbol SWK, and it looks about 27% undervalued with a dividend yield of 3.71%. Next is Cisco, ticker symbol SYY, and it looks about 12% undervalued with a dividend yield of 2.84%. Then we have Target, ticker symbol TGT, and it looks about 32% undervalued with a dividend yield of 3.2%. Next is T. Rowe Price Group, ticker symbol TROW, and it looks about 23% undervalued with a dividend yield of 4.34%. Then we have Walmart, ticker symbol WMT, and it looks about 71% overvalued with a dividend yield of 0.85%. Next is West Pharma, ticker symbol WST, and it looks about 8% undervalued with a dividend yield of just 0.25%. And finally, we have ExxonMobil, ticker symbol XOM, and it looks about 34% overvalued with a dividend yield of 3.64%. At the bottom of this page, I can also take a closer look at any of the Dividend Aristocrats, simply by typing in the ticker symbol in cell C73 here. Let's pull up Abbott Labs, ticker symbol ABT, and take a closer look at this dividend stock. Over to the right, we have the Dividend Yield Theory chart, where the black line is the price history for Abbott for the last 7 years. The green line is the fair value based on Dividend Yield Theory, while the blue and red line indicate a 15% discount and premium to fair value. We can see that since about early 2022, Abbott has been trading below its fair value, oftentimes dipping well into the undervalued range. Below the Dividend Yield Theory chart, we can see Abbott's dividend yield history, also for the last 7 years. The blue line shows the dividend yield at the end of each trading day, while the red line is the rolling 5-year average trailing dividend yield. These charts can give you a little bit of detail into how effective Dividend Yield Theory has been as a valuation tool. To the left of the Dividend Yield Theory chart, we have a brief estimate of the performance track record for the application of Dividend Yield Theory over the last 7 years. It measures the total return of investing in Abbott Labs on every single trading day, excluding the last 12 months, and holding your position through today. So in this example, the returns are for all trading days between January 29, 2019 through January 29, 2024, and holding the position through January 29, 2025. On average, Abbott Labs generated a return of 9.6%, which is decent. If we only purchased Abbott Labs when Dividend Yield Theory suggested the stock was undervalued, we would have improved our average return to 13.41%, which is much better. And the average return for all of the overvalued days, as suggested by Dividend Yield Theory, would have led to a 7.87% average return. There is also a table showing the dividend growth history for Abbott Labs between 2013 and today. Just above this table, we have a forward-looking total return estimate, which is 12.58% for Abbott Labs. This is a long-term, 5-year return estimate based on the forward dividend yield, Abbott's projected earnings growth rate with a margin of safety, and a potential return to fair value based on Dividend Yield Theory. In the table above, you can see the performance outcome for each Dividend Aristocrat and whether or not the application of Dividend Yield Theory would have led to a more favorable outcome. There's also a snapshot of the 1, 3, 5, and 10-year dividend growth rates and the long-term 5-year return estimate for each aristocrat. As you can see, the application of Dividend Yield Theory would have led to better performance for most, but not all of the Dividend Aristocrats. And you can also see that some aristocrats have generated much better returns than others during the last 7 years. I share a copy of this spreadsheet with my Patreon members, as well as my paid newsletter subscribers. There's a link to both platforms in the description below if anyone is interested. I update the spreadsheet every month with any dividend increases, and add or remove Dividend Aristocrats as necessary throughout the year. I hope you enjoyed the video. If you did, please give it a like and subscribe to the channel. Thank you for watching, and see you next time.